that the principal source of inflation, which has been the commodity sector, has peaked out and rolled over, and was doing that even before the FOMC meeting. So you've got this confluence of factors where the Fed's bringing up the date of the tightening, and at the same time you're getting inflation expectations actually starting to roll the other way, where you get a rally at the back end and a sell-off at the front end.
And so, obviously, in light of that, we've seen a strong dollar, weak commodities, and soft equities today. Did all of those reactions also make sense to you?
Well, the markets will often, have their exaggerated moves. I mean, look, I would tell you that I was struck. I mean, in a 6-week period, well, for a 6-week period, it's almost as if Powell did a 180. Now, we can argue as to how hawkish and the fact they haven't really done anything yet, that much is true. But when you go and read the Q&A from 6 weeks ago in the press conference to what he said on Wednesday, it's like it's not like 6 weeks went by, it's like 6 months went by. I mean, there was a definitive change in his tone. So I would say, yes, the markets obviously always will weigh the risks, and you can argue that there's been a bit of an exaggeration here, but we got to keep in mind here that, the forward multiple is 21. It's not like 14 or 15. So you still have very lofty multiples here. And so I think that the market reaction has been exaggerated perhaps, but it's been what I would have expected, because I think that the tone from Powell, and I think it was affirmed today by Bullard, that they become, if you want to call it more hawkish, less dovish. Let's face it, at the margin, the Fed's tone has changed, and the markets responded accordingly.
David, speaking of exaggerated, what do you make of the move in commodities? As you brought up there earlier in the week, the Bank of America Global Survey said that commodities had overtaken Bitcoin to become the most crowded trade, but we saw a sell-off in so many commodities, I guess, except for the price of oil.
Right. Oil's almost operating on its own particular set of unique supply and demand characteristics. But, I would think for a while, looking at global industrial production and then weighing it against, say, the CRB index, that, yes, the CRB index should have been in a recovery phase.